Hey everyone, welcome to the Profit Path AI podcast, where we talk with the people driving the future of insurance and financial services, sharing real stories, lessons, and strategies to help your agency grow and run smarter. We talk with industry experts across the country about how they're using innovation and AI to solve real world challenges in business. At Profit Path AI, we help insurance and financial service leaders use AI to attract clients, streamline operations, and grow profitability without the chaos. So, if you want to learn how to take your agency or advisory practice to the next level, stick around. And if you're interested in a free growth consultation, just drop us the word growth. The five core issues before we dive in that we deal with, for those who follow the show, we talk about the five biggest challenges we see owners and leaders facing today: cash flow, profitability, finding and keeping great people, scaling without chaos, attracting and retaining clients, and protecting your own time and energy as an owner. Today's conversation hits those challenges head on because managing risk and compliance the right way can free up time, protect profits, and give leaders the confidence to scale without surprises. Today, we're joined by Travis Dulaney, founder and CEO of Balance Trust, a risk and compliance platform helping banks, fintechs, and embedded finance brands get a real-time handle on third and fourth party risk, know your customer, anti-money laundering, and the controls that keep regulators happy and customers protected. Travis has spent his career building companies in payments and regulatory tech. Today, he's helping institutions turn compliance from a cost center into a competitive advantage. Travis, welcome to the show.
Thanks, Joey. Appreciate it.
It's great to have you, man. So, Travis, before we dig into the technology, let's start with your story. What sparked Balance Trust? What problem did you see in the market that you wanted to solve?
Well, and I'm glad you framed it that way because, as an entrepreneur, I seem to just look to solve problems all the time. I don't know if it's a man thing or not, but it's just kind of we like solving problems and fixing them. Problem is when you're talking about industry problems, when there's so many stakeholders and so many moving things, those are very hard to do sometimes. And so really my idea really came from pain and pain that I had personally in my previous startup. So in my previous startup, we had a startup that was a fintech that basically moved money. It was instant money movement so that we could try to eliminate NSF checks and all these other things and to move money around. So it's called real-time payments, and there's still a big industry now that's been birthed out of that. And so during that process, when I was working with banks to get people approved, I saw an inconsistency between different banks on which ones would want to take certain business. And it could be the same type of business, but they would still make a different decisioning. There was this bias based on the individual, not really the rules or the laws or anything like that. And so we would submit, close to 500 applications and maybe get 30 of them approved, right? And that's just like really low odds, right? And so it was like, there's a problem here, right? And why was it, I sold and exited the company in 2020, but I was always looking back, how could I do better? How could I have done, this differently? Because it wasn't up to my expectation of what it should have been how fast and how good I could have grown it. So I was just reflecting, right? And I was reflecting and going, how could I do this better? What could I have done differently? And I saw these challenges. And at the same time, I just happened to have one of my old customers that say, hey, can you come help me? And I've realized that the reason they had help, they had no clue anything about compliance. They were just selling without understanding that, hey, you live in a regulated space. And so, insurance, healthcare today, banking, fintech, all those are regulated spaces. And a lot of people that are getting into the spaces as entrepreneurs today are good at raising capital, are good marketing people, but they're not from the industries, right? So I grew up in an era of the fintech era where most of the guys were payments people. They were bankers. They were people that understood the business. So they were the first adopters that got out there and the first entrepreneurs. But now they're not. And so what's happening is that people are jumping right in. They're building companies and building them fast. And all of a sudden, $80 million is missing, and the guy shows up in Greece filing bankruptcy, right? And so, like, wait a minute, that shouldn't happen in this day and time, right? And so I saw FTX happen right before my eyes, and I was still like amazed that grew like it did, and I wasn't amazed or surprised it imploded like it did, and it has nothing to do with crypto. It had absolutely nothing to do with that. The risk associated with that business had to do with him not knowing what the heck to do. He came from the one industry, didn't come from the other one. So really the idea was about, there's a gap here. There's a real problem here. And people are losing their real life savings and money out of stuff like this. And so what can I do? And we had a little earlier discussion, that said, your life has to be purposeful, right? At some point in time, you have to be, one time it's paying the bills and it's doing all the things you got to get done in a day. But at some point in time, it's like, what am I doing here, right? Am I just waiting to die, or am I going to execute, make something of my life and make an impact where we can make change? And so that all built up. And there's this idea I had about how to bridge, and this kind of plays on our name, Balanced Trust, but bridge the relationship between fintechs, between businesses, banking, regulated kind of businesses, and how can they do better at building trust between them? Because, there's an old saying in banking that says trust but verify. But there was no verifying going on. That's the biggest problem with that. So I said, let's build a verified platform so they can both kind of interact together, talk to each other, and in a cloak of, quiet, if you will. So, banking is run on a lot of secrecy, and the BSA Act actually says Bank Secrecy Act, right? And so they can't even tell you who their customer is, even though they might be standing next to you and your best friend, right? But so there's these weird things that banks have and financial institutions that are regulated have that, unless you've been in that world, you don't appreciate and understand it. So how could I build that too? Because we're moving to a digital world that everything's interconnected. So now systemic risk and third, fourth, fifth, sixth parties down is a risk, and you don't even see it coming, and it'll happen in a millisecond, right? And the more we get interconnected with digital assets and technology, the more the risk goes up. So I said, we got to solve this. We got to get out in front of it before it becomes a problem and brings an entire country down. And that's what could happen. So that's what we went after. And so I met up with our co-founder. She's a former OCC regulator. We've got good friends that are from the FDIC involved, and we also have chief risk officers from banks involved, and also CEOs of banking organizations and stuff. And we're set out to really fix this, right?
You've basically answered every question I had in my
Well, you give me the mic, I will go. Everybody that knows me knows I can talk. There's no problem.
I'm kidding, man. Listen, well said. All of it was well said. So let me go with this. How has the conversation around vendor risk evolved since COVID and the rise of embedded finance?
Excellent question. And so I'd say it's not so much COVID, but I'd say the rise and fall of FTX and the awareness of digital assets, crypto, all these things have come into play. And with that is the latest with the Genius Act and stablecoin. That's the big wave and push. And we're seeing that even now. Banks would not want to even touch anything until it was okay. As soon as that came out, they're like, okay, let's talk. Right. And so there's also applications and figuring out how to do it. Right. So anything new, no matter, we're talking AI, we're talking, digital assets and things of that nature. There's a talk about how, and there's theories and discussions about how product evolves and how organizations evolved. And in the corporate world, there's a training you can take. It's called storming and norming. And, first the process is crazy and then it gets kind of normalized out. Well, the same thing happens with a product adoption over time. At first it's crazy, like crypto was for a period of time. Then it gets kind of bad because people mess up and they, are bad actors. But then, laws and rules start to collapse it down a little bit and get it kind of, organized out a little bit. So since the pandemic, really what I've seen is more awareness in the digital asset space, what's going on there, and how can we take advantage of something to make our lives better in some way, shape, or form. Embedded finance is really just the art of going into a corporate world and embedding payment products inside of that, right? And so it's actually more corporate finance type of stuff, right? So, for example, let's just say, and I wouldn't call this embedded finance, but it's a close thing that give you an idea to it. There's a company called earned wage companies that actually go sell to corporations that say, hey, give your employees a chance to get a loan against their paycheck they're going to get in 2 weeks. But, hey, the car broke down this week. They don't get paid till next Friday. Let them pull $500 on a loan against their paycheck. So it's kind of a embedded loan, if you will. That's kind of like embedded finance, right?
Right.
And so what a lot of times people need to use financial products for one thing or another, whether it be to move money, or, and it's always about movement of money normally, or buy something, and it's embedded in a product. So let's talk about gaming, for example. You can go play a game online, and if you're playing for $30 a month, it's one thing. But most of them will go buy this for $5, go buy this for $10. Right. That's like embedded finance in the gaming industry, like not gaming, meaning
Sure.
gambling, but rather, not gaming, playing games. But so it's really about embedding the capability for paying for things, exchanging value and stuff inside of the corporate world. That has got a long tail. It's going to take a long time. That's just kind of come on the horizon as a word. And it's more of a marketing thing. I mean, we've been doing stuff like this for years, right? In the prepaid space, we've been going to GM to give you you see these today, you go test drive a new car, they'll give you a $50 credit gift card. Well, that is kind of like embedded finance back in the old days, because they gave them a card as a rewards program. Rewards and loyalty, isn't that, some form of embedded, right? And so you're getting a credit for something. Do you get $5 off? Is it just really just an exchange of things, or are you really moving money around? And so that's the trick. And some of that's marketing, to be honest with you. So a lot of it has been about the push of change. Right. And is there a better way of doing things? We got more.
I'm sorry?
We've got more tools in the industry than we've ever had.
Good. Before we went on camera, we were talking, and business owners, small business owners, it's ready, fire, aim. Let's go. And I told you, you don't know what you don't know until someone brings it to you. And that was the relationship that, between third and fourth party risk. You don't think about it so much. So let's talk about one of your specialties, which are third and fourth party risk. For our listeners, in case you didn't know, third party risk means the vendors you hire, and the vendors, and the fourth party risk is the risk hiding inside your vendors. So regulators hold you responsible for both. So you have to know your entire chain. Number one, where are these risks more often hiding in financial and insurance businesses today?
So, it's actually, you don't realize it. And most of the time we just don't think about it, because you realize just the art of networking kind of creates these third-party risks, right? I mean, you could say, well, that's a brand risk if somebody says something bad about me or something. Yeah, okay. But the way banks actually operate is in the categories of risk that they look at, right? One is, a brand risk and somebody says something bad about me, right? PR, that type of thing. One's operational risks. There was a failure that gets collapsed and your customers aren't happy, or you have a liability now that you're due, right? And then there's regulatory and legal risk, right? And so in the payments world and in the banking world, there's a little nasty word called nested processing that means that you can't be hidden underneath something or somebody else's name is really what it means. It's like you're hiding behind somebody else's name. You're not following the law, so you can hide because nobody knows you're there, kind of thing. That's the intent of what it kind of means. But what's happening is, and I'm going to use this as an example. So you got a new industry like the crypto space, right? The digital asset space. Yeah. These guys are just out hustling, trying to, create relationships, networking in the digital world. So they meet people, they have a relationship, and especially in an industry is new. And this happens a lot in greenfield environments because there is no connection. There's no existing incumbent you can go to. You can't work with certain people in the industry because it doesn't exist yet. They're just all coming together to work. So think of this as a crypto guy would go, okay, I'm going to do this part. You're going to do that part. You're going to do that part. And we're just share everybody's stuff. And then we all make money. Okay. Yes. Sounds like a good idea. Right. But the problem is, this guy is onboarding the customer and then you're responsible for that. And basically you're not onboarding them again. This is the weird about regulation is it's siloed. Just because the guy before you talked to the same customer, asked for the same information, you still are required to do the exact same thing again and prove that you did it. So part of risk and compliance is, oddly enough, compliance just seems write what you are going to do and then prove to me you did what you said you would do. Right? Here's the rules I'm going to follow. And then along there within the laws, or the regulations. So it's really about the interconnections. Like for example, in insurance, if you're building products or relationships, are they following through with that? What's not done a lot in any regulated industry is identification of when you're delegating responsibility to somebody else. And so that's probably the biggest problem. That's something that we try to identify and solve for, is it allows you to delegate, say, okay, I'm responsible to do this, but it's within my power to delegate it to Joey. You are going to do this part of the job. I'll take 60%. You take 40%. You can do this contractually. You can build an agreement, right? But now I just have to enforce that you are doing your 40%. If I don't actually go verify that you've done your 40%, now I'm at a risk of failure. And what does that mean for failure regulation? Well, it could mean fines. It could be jail time. It could be putting you out of business, for that matter. And so I was on the call, just a funny side story a minute. I was actually on the call with Ripple early days on, talking to their attorneys about trying to do a program with them when they were first rated by FinCEN. You've never heard a bunch of attorneys scream like a bunch of girls then when they come in with guns blaring like that. They don't always shot anything, but it's scary, right? And I remember hearing that, and I never want that to happen to me, right? And so, because half the time it's just knowing, and like playing bumper pool, know to go around the bumpers, right? Sure. It's like, don't just know where your structures are so you know to work around it. So that third party is really about awareness half the time.
Everybody wants to get paid. Everybody's dying to get paid. Let's go, right?
Yeah, exactly. So that's okay. You just have to verify. And that's what it most of the time is. It's like look, we all go into every relationship, just whether it be a personal relationship or a business relationship, with an expectation that everything's going to go wonderful, right? Well, that's okay. And it does. And a lot of times it does, and sometimes it doesn't. But you just have to check to make sure that everybody's doing their part of the job, right? If you're contracting with somebody to do sales for you and they didn't do it, you would be saying something because that's the revenue line, right?
Right.
But if they're doing something illegal to get you there, then you're on the hook for it.
It all makes sense when you talk about it. If you don't talk about it, it doesn't make sense because you don't know about it.
Isn't every relationship have communication?
Yes. Yeah, for sure. For sure. This next part, know your customer, know your client. I think that's probably the basis for every relationship that you have, right? So when reading about you and what you do and know your client, know your customer came up, anti-money laundering seems crazy. Let's unpack both know your customer and anti-money laundering for a moment, because those items come up in every risk conversation. Know your client or know your customer is how institutions verify who they're doing business with, and anti-money laundering is about monitoring transactions and behavior to catch and prevent illegal activity. How do you see know your customer and anti-money laundering evolving with AI and automation?
So AI is a powerful tool.
Yeah.
It's new still, like every product. It has to evolve a little bit, but eventually it will get to a point where it can do some of these jobs a lot faster, because really what it's doing is today you have services that you can go out to validate who somebody is. Like, if I needed to check who you are, I can get a little bit of data and I can validate that you are who you say you are, right?
Sure.
When it comes to AI, yeah, it can speed up opportunities. It can cut down onboarding time. It can, validate different sources that what you're typically doing. But, on the counterpoint, it can also create a facade of a fake person, right? So you're always got to stay ahead of what's going on. So AI is going to do great things for us and the crooks, right? So it's like you got to be aware of that and kind of get ahead of it a little bit. I think there's a lot of opportunities to bring things in of that nature, but I think what we're going to see is this is where social media is going to almost become part of your identity. So if you're sat there, you just took a selfie in New York, and then all of a sudden you're trying to do some transaction in San Diego, well, AI is going to really quickly pick that up. Now, honestly, there's networks now called neural networks that do that on a transaction level when it comes to money movement. Like FICO does this now. It's and there's ways to identify that on a payment stuff. But we've been looking at. Let's face it. What did the bank robber said? Why do you rob banks? Because that's where the money is. Well,
Sure.
payments and banking is where the money is. So we've had crooks and people trying to hack and manipulate the system for years. So we're kind of conditioned to some of that and looking at some of it. But I do think it's going to help us. It's going to help us in a lot of different ways. It won't be black box, because we get kind of worried when we don't know what's happening. Eventually it will, right? Like we've got over identity worries about Big Brother, sort of. Younger generations just don't care, right? And until they do. And so it'll be, we're always evolving when it comes to certain touchy subjects and about personal space, about identity protection and ourself and what people know and what they don't, and what people take advantage of and what they don't, right? And so all these things come into that KYC piece. And I bring that all the way back there because I do feel that we have a lot of innovation left in that space. I still think, and I know of some things that are coming out that's like this. I always had this idea that we should have the personal power. I hold this up as in my wallet, but whether it be money movement or access to my data, I should be allowed to say, yes, you can have it. No, you can't. Today, it's not. It's freely shared, right? And so that's a problem for me personally. But I do see that evolving. And why it ties into KYC, because if you applied for a loan, but maybe it wasn't you, maybe it was that fake AI that applied. Nobody knows, because they can get on the screen and talk to you just like the normal person would, right? So, sometimes it's a little scary when you look at the other side of this. I saw some stats from RSA a number of years ago that was about, our phones are attacked anywhere from 80 to 800 times a day. You never even know it.
Jesus.
Everybody's individual phones are, because they're bots. They're just computer algorithms that are looking for holes and ways of getting around. It almost looks like the Matrix movie, right? Or the Sentinels are going after you, right? And so we're being attacked all the time. And I felt this real time running a payments company. I had the Russians and the Chinese both hack me in my Wi-Fi in my house, right? They would follow me wherever I was at, and I had to kind of create cloaking devices and all kinds of weird stuff. But so I felt it, I experienced it, and I had a friend and a coworker once said, "Are you paranoid?" I'm like, "Heck yeah, I am." Because it's kind of something you just kind of have to be aware of. And then you think about poor grandma; she don't know any different. She's clicking the link, right? So I get into, I know I shifted to fraud and some of this other things, but KYC is important in validating who they are, because money laundering is about identifying bad actors. But I think that whole model is dated, and I think that's going to evolve. Because do you think Osama bin Laden, which is on the AML bad boy list, do you think he went and filled out an application going, Osama bin Laden? Like, come on, right? They're always going to be cloaking. They're always going to be in the shadows. Since the day of time and the day of movies, the bad guys are in the shadows with a hoodie and kind of dark, right? And so they're always going to do that because that's just the nature. Now, the problem we get into is there's a saying that says, how do you hide? In plain sight.
Right.
That's what the terrorists do. They lie right in plain sight. So how do you manage that in KYC? So to answer your question, I don't have a full answer for that, but I know it's changing. And I think AI will be a piece of that that'll help us defend, but it's going to take some different ways of thinking to validate who they are. There's a basic level of assessment you can do, right? AI can help you do that. We actually have one of those on our website. You can go on a website, put in the name of your company, and it'll give you assessment of what the internet thinks of you, because that's what it is, right? We're just using a normal language LLMs that says, that boils the ocean of the internet and says, okay, this is what's on the internet about you. And so it's kind of telling sometimes.
We have a show. Every one of these shows that we do is, it's designed to help the small business owner, medium-sized business owner, and the topics. We've been blessed because we've talked to some really, really insightful people. We have one coming up. It was supposed to be Friday. We're going to have to reschedule it, but it's all about cybersecurity. And my belief is that over time, it's probably one of the biggest things that we're going to be involved with in the future, along with AI. And just listening to you kind of validates that.
Oh, yeah. Yeah.
It really does.
I would say that we've already been battling that at a level. Just the average person didn't realize it. Right.
Yeah.
And
well, 80 to 800 times a day, that's a new one for me.
Yeah.
Right.
Yeah.
Well,
there's a reason why the NSA is who they are. Right.
Right.
And a lot of people get, they are surveillancing Americans or whatever. They hide in plain sight, and if there's smoke, there's fire, and so that's the reason why they have to be the way they are. And there's this whole thing about your little camera there and putting the little shade on it because people can see it. Hey, heck yeah! I mean, this has not been new. This is like 10 years old, if not 15, right? So you imagine how things evolve and the speed that we're seeing in the market. The only thing I can say that when it comes to stuff like this is honestly that I have a kind of a saying that nothing is as it appears ever. And if you think about media today and the way things is, nothing is.
That's a tough world to live in.
It's a different story behind the scenes all the time, right?
So compliance as a competitive advantage. Many business owners see compliance as a necessary evil. There's not one that I know of that doesn't feel that way. You've argued it can actually be a growth driver. How does transparency and risk scoring help organizations win trust with partners and clients?
So think about this, right? So when you're doing business with people, how many people run your credit check, right?
Sure.
How many you want to know, how stable is your company if I'm a partner with you, right? Isn't that the same thing we're talking about, right?
Yeah.
It's a cloak of somewhat, hey, you fly straight, you do the right things, right? And so as a result, that's somebody I want to do business with. You have integrity. You're actually doing what you said you would do. And like I said, compliance is simply that. It really is just saying that you're going to do it this way, and then you have to prove it that way, and then you get a certification for that. There's all kinds of certifications and tests and that you can have done, or audits that you can have done on you. It's like information security. There's a thing called SIG-Lite, right?
Yeah.
In the payment world, there's a thing called PCI. And most people that are accepting payments or something has some form of PCI acceptance, right? And it just says, PCI is simple. I'm going to, if I take your payment, I'm going to protect your data. And that means I'm going to follow these guidelines to make sure that nobody's going to hack and get your information or anything like that. So to me, I think it's about trust that we build with society and our customers. And the more you can come to the table and say, look, I've done things correctly. And as a result, you can trust me because I'm doing things that I've said I would do along the way. And I've even been certified or audited by a third party that is noted that.
That's strong.
In the payment world, when you're moving people's money, people kind of get funny about their money. I would too, right? So that's the whole thing is out of everything other than, relationships and health, the money is kind of sacred, right? So don't touch my money, right? And
Right.
so that's what, to me, that's what that says, right? It says that, hey, look, I'm here for the long haul. I'm not here just to make a buck and disappear tomorrow. And by doing the right things and following those things and protecting your customers, it's just that badge of honor that you're providing, right? That's
Yeah.
what it wants to.
Well said. So let's just zoom out a little bit and talk about leadership for a minute. What's been the most important lesson you've learned building balanced trust?
Um, from an entrepreneur and leadership standpoint, I think, you said it in the very beginning. And investors, one of the very first things they want when they invest in a company is their number one thing. It's your team, right? So I'm a big believer is I by title I'm a CEO, but really what it means is I do everything they need, right?
Sure.
My job is to make sure that all my team has what they need to deliver and execute, whether that means money, business, or whatever, but they are skilled in what they do and they're doing an excellent job at it, and I'm there for them. So I think part of that is just reinforcing that. Um, it's not my first foray in entrepreneurship, and I worked in the corporate world too, and that's a different world because of the law of politics involved and things. But as a small business person and a small business owner, sometimes ego can get in the way of things, right? And ego and fear is our biggest two enemies. And so the more we can be open and honest with our team and with yourself, is the best way to approach. I get up every day trying to be a better person than I was yesterday, right? And
Good.
that's a golden rule that I have, and I'm always trying to help somebody else get to that next level.
Right.
And so that's what I do with the team. And so what I've learned is just kind of reinforced my understanding of that. We've built a really good team of people that can execute. And really that's what it is. It's about them executing and you supporting them. So that's, to me, that's the most important thing. The market, you have to figure out and guide them a little bit, if you're, whatever you're going after and whatever market you're working in. But you got to support that team. It'll undermine you if you don't.
Right. So let me ask this, because I think this is a very important question to our viewers. How do you balance, we're all worried about revenue, right? What do we got coming in? What do we got coming in? How do we balance the revenue part with the things that you do, the expense, which could be massive if you don't address it the right way? So what advice would you give to a small to mid-sized firm that they don't have those massive budgets?
Does anybody have a massive budget? I
Well,
mean, I guess some have more than others, but it's all relevant to some extent. You could have a bigger war chest, but you might have $1 million payroll too. So,
sure, of
um,
course.
it is kind of relevant, and you're not different than everybody else. Everybody's feeling the same thing.
Sure.
But I will tell you, it is hard, and it's
But
very hard.
you bring in a dollar, and there's so many things
Yeah.
pulling at that dollar. And, interviewing you, it just becomes even more apparent that there's things you never dreamed of pulling at that dollar.
Well, not only just pulling out the dollar, but it's also just things that need to be done that
Yeah.
are task oriented and needs to be focused. And I guess you hear a lot of things, and there's a lot of suggestions and ways of doing things. But I'll tell you what's worked for me, right?
Okay.
So a little bit about me. I have ADHD, and I'm a Type A personality. If you haven't figured that out, right? And so I'm always on the go, but I'm also shiny nickel a little bit because I think a lot of entrepreneurs are, because you can't see vision. You got to look at what's going on and make sense of it, and make sure that you're guiding the boat correctly, right? You don't want to end up in a lagoon and can't get out, right? And so there's something that I say, and I have it written up right on the board here, because there was a book I read not too long ago which sums it up kind of nice and easy. Sometimes you really don't appreciate it until you follow it really strongly. And the book's called The One Thing, right? And I have it written up here. What is the one thing that makes everything else irrelevant? and makes it all go away. And so if you focus on the one thing, everything else will resolve, right? Now, doesn't mean you won't have to work long hours. It doesn't mean that you get to do one thing and then, cut out for the day and it's an hour long, right? I believe that you have to grind it out, right? So, and especially in the beginning when you're getting a company going, you're going to have to, put in those 14, 16, 18-hour days, right? And I used to be like extreme, and I would actually work for 3 or 4 days and never sleep. But that doesn't do you any good either, because you definitely need to sleep in repair mode. But if you focus on the one thing, right, whether it be sales or whether it be revenue, or it may be collections, because maybe you need to get paid after you did the work, or maybe it's product and you need to build something out, or maybe it's shipping and getting things shipped out. Whatever that one thing is that day. But every day there's one thing you should be focused on. I'm a list guy. I have probably 4 notepads here, and they're based on different areas of focus. So I keep up with everything that's going on, but there's one thing that I must get done every day. And I focus and I make that conscious decision either before I go to bed, so I'm working on it, or as I get up, right? So I think focus and helps strip away all the noise, and also takes the anxiety, because when you have, I love the commercial with the Post-it notes, and I think it's Progressive or something, where the small business owner has this big monster with all the Post-its, and it's like, fire this guy, hire more of this, do more. That's everybody's life, right? But there's one that matters more than everything else.
That's interesting, and what a wealth of knowledge that was. But we've come together, as the Profit Path AI, because we realized through our own personal experiences that we're good at maybe one thing. Maybe we're really good at sales, and all of these other things that I've been, and these people that I'm interviewing, all bring something different to the table. And we just wanted to scratch the surface of, okay, as a business owner, you're really good at one thing. And normally a small business owner goes into business with that one thing that he does very well. And all of these other things like marketing and management and human capital management, and you name it, those things not so good. And so that guy that started that business, greatest intention, he little by little gets pulled into doing things that he's not good at. And the thing that he's really good at, which was, the sales part of it, bringing in the revenue, is now starting to slide because he's doing all of these other things. And so just as our business, we're trying to bring to light the ways that maybe automation can take some of that off of your plate and keep that business owner doing what he does extremely well. So you hit it right on the head.
What you refer to, I would call scaling part of the business. So
sure.
Remember, I'm an entrepreneur, so I'm always building from scratch and growing, selling, or moving, or continuing growing, right? Yeah. And so every stage needs something a little different, right?
Yeah.
So once you're in a point where you're overloaded, where there's so many going on, you cannot even get to one thing, then you've got a problem. Either you need more staff or whatever. AI is a great solution for stuff like that, because there's a lot of things you can't automate. I would only caution that in this stage, and don't ever just set it and forget it, because that's one of the biggest things that you'll think it works, and then you need to tweak it, because the market better than anybody else, because you're dealing with the customers and all so you need to always tweak the message. It's like you could say certain things. I forget what it was. There's a word in Spanish, or there's a word that we used that was very colloquial a number of years ago, and in Spanish it meant cockroach. And I can't even remember what the word was explicitly, but it was like if you're not careful, then you could offend other groups that you're not even realize what you're doing just by, especially marketing, right? Because words matter, right? And so you always want to tweak to the times, what's going on, make it relevant. And so, never set it and forget it. But I totally agree with you that there's an elevation point where you have to elevate you and the overall organization to be able to handle more with less.
Sure.
And that's really what it comes down to is becoming efficient. And I have to apologize a little bit because some of that comes natural to me because I'm a Six Sigma process engineer. So I naturally kind of think that way. When I'm building process, I'll start building blocks. Right? I'll start with this. I consciously know I need to build the next wall and how I will structure it. But a lot of people don't. To your point earlier, that you might not have the skill set of how to make things efficient. And AI is a great tool for stuff like that because you can set them up in roles, you can do certain jobs or whatever, and then you can have those things automated and make things easier for you. And it's funny, what you mentioned is kind of what we do with Balanced Trust a little bit for the roles of chief risk officer, compliance officer, BSA officer, and all these people that are in risk and compliance and banking and fintech and those spaces. Today, so many of them just work in spreadsheets. Like they might have to deal with separate customers and separate emails. And so all this stuff is kind of chaotic. So their administrative time is more like 60 to 80% of their day. And the work they're doing, making good decisions and evaluating things they need to be evaluating, is actually very small. And so you want to improve that. So we actually we use a lot of AI in our platform. So for the same reason. To me, AI, since I've been around a while, is just algorithm on steroids, right? That learns on its own. So, but ultimately, what it does is it can help you elevate yourself as a small business owner, so that you're out of the weeds, right? And to work on your business, not in your business, so to speak. Because that's what I mean by elevating. Then you have to constantly, every company I've started, I've had to kind of elevate myself. In the beginning, I'm doing everything. Right. And then eventually I got to either give it to somebody else to do or automate it and help it scale. That's all kind of part of I'd say the path of an entrepreneur starting a company.
Those are the 3 days without sleep.
3. Yeah. Right. If it was only 3, right?
Right. Listen, man, this has been a fantastic conversation. Really.
Thank you.
Really valuable for anyone who cares about trust, data security, regulatory confidence. Thanks for sharing your insights and helping us see how AI and compliance can actually work together. For our listeners, if you want to connect with Travis and the Balanced Trust team, we'll link their website, LinkedIn, in the description on our YouTube channel. And if you're ready to see how AI can transform your agency, financial business from client acquisition to compliance and profitability, just drop us the word growth. I'm Joey Paluzzi, reminding you to stay sharp, stay human, and stay profitable. This is the Profit Path AI podcast. We'll see you on the next episode. Travis, thank you so much.
Thanks, Joey. Appreciate it.
You got it, brother.